What if I told you there were companies out there right now trading for under $10 a share that could potentially make you a millionaire? Sounds too good to be true, right? Well, stick around because in this video we're diving deep into 3 cheap stocks with super high potential to make you a millionaire and skyrocket your portfolio. We're talking about a potential revolution in the way we get paid, a game changer in the world of healthcare technology, and a company sitting on a resource that's more valuable than gold in today's world. And the best part? You can get in on the ground floor for less than the price of a cup of coffee. We're going to break down the numbers, analyze their potential, and see why these seemingly small companies could lead to massive returns. If you're ready to potentially turn a small investment into life-changing wealth, you don't want to miss this. If you only watch one video today, make sure you watch this one all the way till the end. We're talking about your financial future here, people. And while you're at it, hit the like button. Let's get 1,000 likes on this one. Share the video, and leave your thoughts in the comments and subscribe so you don't miss out on the next important financial investing update. The first company on our list is disrupting the way we think about payments. Paysign, trading under the ticker symbol PAYS, is a leader in the prepaid card and payment technology space. They're not just another payment processor, they're creating innovative solutions for businesses, governments, and individuals. Think about it, how many times have you used a prepaid card for things like payroll, government benefits, or even just a gift card? Paysign is behind the scenes, powering those transactions and making sure everything runs smoothly. With a market cap of around $144.05 million, Paysign might seem small, but don't let that fool you. This is a company with a big vision and the potential to shake up the entire payments industry. So let's dive into the numbers and see why Paysign could be a hidden gem in your portfolio. When we look at Paysign's financials, we start to see why this company has so much potential. Their earnings per share currently sits at 16 cents, which might not seem like much, but it's important to remember that we're talking about a company with a share price under $10. Their PE ratio is currently at 17.25. Now, this is where things get interesting. A lower PE ratio compared to its industry peers can sometimes indicate that a stock is undervalued, meaning there's potential for growth. Paysign also boasts impressive revenue numbers, generating $47.27 million in 2023 with a net income of $6.46 million. This steady revenue stream, coupled with their innovative technology, suggests that Paysign is well-positioned for continued growth in the coming years. So, what sets Paysign apart from the countless other companies in the crowded payment space? The answer is simple: innovation. Paysign isn't just following trends, they're setting them. They're constantly developing new technologies and solutions that are changing the way we think about payments. One of their key differentiators is their focus on niche markets. They're not trying to be everything to everyone. Instead, they're targeting specific industries like healthcare, government, and corporate incentives with tailored solutions that meet their unique needs. This targeted approach has allowed Paysign to build strong relationships with key players in these industries, giving them a competitive edge and a loyal customer base. And with the payments industry constantly evolving, Paysign's commitment to innovation is crucial for staying ahead of the curve. Now I know what you're thinking. Is Paysign the right investment for me? Well, like any investment, there are always risks involved. But when we weigh those risks against the potential rewards, Paysign starts to look like a very compelling opportunity. Remember, this is a company operating in a rapidly growing market. Paysign is strategically positioned to capitalize on this growth. Of course, past performance is not indicative of future results, and there are never any guarantees in the stock market. But with its innovative technology, strong market position, and impressive financials, Paysign has all the ingredients for a potential success story. So, there you have it. Paysign, a company with the potential to disrupt the payments industry and generate significant returns for early investors. They're leading the charge in innovation, boasting solid financials, and operating in a market that's primed for explosive growth. Now, I'm not a financial advisor, and this is not financial advice. Always do your own research and consult with a professional before making any investment decisions. But if you're looking for a company with the potential to supercharge your portfolio, Paysign is definitely worth a closer look. Now, if you're looking for a tool to level up your investing game, Forecaster is my secret weapon. From analyzing trends to uncovering undervalued stocks, it does it all. Get started with a free trial now using the link below, and don't forget to use my discount code, Galore10, for 10% off if you decide to sign up after your free trial. Next up, we're diving into the world of healthcare technology with LENSAR, trading under the ticker symbol LNSR. This company is pioneering a new era of laser eye surgery, and their technology is nothing short of groundbreaking. We're talking about a company that's using cutting-edge lasers to improve one of our most precious senses, sight. LENSAR is developing and marketing a suite of advanced laser systems that are transforming the way cataracts and other eye conditions are treated. With a market cap of $130.67 million, LENSAR might seem like a small fish in a big pond. But their innovative technology and massive market potential make them a force to be reckoned with. So let's take a closer look at what makes LENSAR such an exciting prospect. Now, let's talk numbers. LENSAR's earnings per share currently stands at $1.46. Again, it's important to remember that we're looking at a company with significant growth potential, so current earnings might not tell the whole story. Their PE ratio is currently -7.75, which, when compared to industry averages, suggests that LENSAR might be undervalued by the market. This could present a unique opportunity for investors looking to get in on the ground floor of a potentially explosive growth story. In terms of revenue, LENSAR generated $42.16 million in 2023, with a net income of $14.38 million. While this number might seem modest, it's important to consider the company's rapid pace of innovation and the growing demand for their technology. So what is it about LENSAR's technology that makes it so special? Well, their laser systems are designed to provide more precise and less invasive cataract surgery. We're talking about faster recovery times, better outcomes for patients, and a reduced risk of complications. Traditional cataract surgery involves using manual instruments, which can be less precise and carry a higher risk of human error. LENSAR's laser systems, on the other hand, use advanced imaging and laser technology to create a highly customized treatment plan for each patient. This level of precision and customization is revolutionizing the field of cataract surgery, and LENSAR is at the forefront of this exciting new era. Their technology is not only improving patient outcomes but also creating a more efficient and cost-effective healthcare system. Now let's talk about the market potential for LENSAR's technology. The global cataract surgery devices market is expected to reach a staggering amount by the year 2030. Driven by an aging population and an increasing prevalence of cataracts, LENSAR is strategically positioned to capitalize on this massive market opportunity. Their technology is already being used in leading eye care centers around the world, and as awareness grows, so too will the demand for their innovative solutions. Of course, investing in the healthcare sector always comes with risks, including regulatory hurdles and competition from larger players. But LENSAR's unique technology, proven track record, and massive market potential make them a compelling investment opportunity. So is LENSAR the right investment for you? Well, as always, that depends on your individual financial goals, risk tolerance, and investment timeline. But if you're looking for a company with the potential to generate significant returns while also making a real difference in the world, LENSAR is definitely worth considering. Remember, this is a company that's changing the face of eye care. They're improving patient outcomes, advancing medical technology, and tapping into a multi-billion-dollar market. That's a powerful combination. As always, do your own research, consult with a financial advisor, and never invest more than you can afford to lose. But with its strong fundamentals, innovative technology, and massive market potential, LENSAR could be a sight for sore eyes in your portfolio. Alright folks, let's talk about a company that's sitting on a gold mine, literally. Well, not gold, but something even more precious in California water. Cadiz, ticker symbol CDZI, owns a massive aquifer under their land in the Mojave Desert. We're talking about a potential 50-year supply of fresh water for Southern California, a region that's constantly grappling with drought. Now, I know what you're thinking. Water? In the desert? But that's what makes Cadiz so interesting. They've got this unique asset that could be a game changer in a water-stressed region. But here's the thing, their path to profitability hasn't been a straight line. They've faced regulatory hurdles and legal challenges that have delayed their projects, but that's also why their stock is trading at such a low price. This is a classic case of a company with huge potential upside if they can just get their ducks in a row. So, is Cadiz a risky investment? Absolutely. But it's also the kind of asymmetric bet that could yield massive returns if they can execute their plan. Remember, I'm not a financial advisor, so do your own research, but Cadiz is definitely a company worth keeping an eye on. Okay, let's dive into the numbers a little bit. Cadiz currently has a market cap of $373.66 million, which is incredibly low for a company sitting on such a valuable resource. To put that in perspective, some of the big water companies out there are worth billions, even tens of billions of dollars. Now, Cadiz's revenue has been pretty minimal in recent years, mainly because they haven't been able to fully commercialize their water project, but that's precisely why this opportunity is so interesting. If they can secure the necessary approvals and start pumping that water, their revenue could skyrocket. Just imagine the possibilities. They could sell water to municipalities, agricultural businesses, even bottled water companies. The demand is certainly there, especially in a state like California that's constantly facing water shortages. Of course, there are no guarantees in the stock market, and Cadiz's success hinges on overcoming those regulatory and legal hurdles. But if they can pull it off, the potential rewards for early investors could be substantial. Now you might be wondering about Cadiz's PE ratio and earnings per share. Well, here's the thing. Since they haven't been profitable in recent years, they don't have a traditional PE ratio. Their EPS currently sits at 47 cents with a PE ratio of minus 10.57. It's not uncommon for companies in their early stages or those facing temporary challenges. Remember, the PE ratio is all about comparing a company's stock price to its earnings. When a company isn't profitable, that calculation doesn't really work. But that doesn't mean we can't glean valuable insights from other metrics. Their revenue in 2023 was $1.99 million, with a net income of $31.45 million. In Cadiz's case, it's crucial to focus on their progress towards profitability. Are they getting closer to securing those crucial permits? Are they making headway in their legal battles? These are the questions that will ultimately determine their future earnings potential. So, while the lack of a positive PE ratio might seem like a red flag at first glance, it's important to consider the bigger picture. Cadiz is a company with a unique asset and a potentially lucrative business model. Their success will depend on their ability to navigate the regulatory and legal landscape. And that's what investors should be watching closely. Alright, let's talk about the future. What are the potential catalysts that could send Cadiz's stock price soaring? Well, the most obvious one is securing the final approvals for their water project. Once those permits are in hand, they can start generating revenue and proving to the market that their business model is viable. Another potential catalyst is a major water crisis in California. Sadly, droughts are becoming more common in the region, and that could create a sense of urgency around finding new water sources. If that happens, Cadiz could be seen as a solution, and their stock price could benefit significantly. Beyond that, there's always the possibility of a buyout. Large agricultural companies, water districts, or even private equity firms might see the value in Cadiz's assets and make a bid for the entire company. If that were to happen, we could see a significant premium paid for the stock. Of course, these are just possibilities, and there's no guarantee that any of them will come to fruition. But the point is, Cadiz has multiple potential catalysts that could unlock significant shareholder value in the years to come. Now, it wouldn't be right to talk about Cadiz without addressing the risks. As with any investment, there are potential downsides that you need to be aware of. One of the biggest risks for Cadiz is the regulatory and legal environment. They've faced opposition from environmental groups and local communities who are concerned about the potential impact of their project. Another risk is the possibility of further delays. Securing permits and navigating legal challenges can be a lengthy and unpredictable process. Any setbacks could push back their timeline for profitability and weigh on the stock price. And of course, there's always the risk that their water project simply doesn't pan out as planned. Maybe they encounter unexpected geological challenges, or maybe the demand for their water isn't as strong as they anticipate. These are all legitimate concerns, and it's crucial to weigh them carefully before investing in Cadiz. Remember, this is a speculative investment and there's always the potential for loss. There you have it, folks. 3 cheap stocks with the potential to make you a millionaire. Remember, these are just a few examples, and there are plenty of other hidden gems out there waiting to be discovered. If you want to take your investing to the next level, Forecaster is the tool I trust to find incredible stocks like these. Don't wait, try it for free today. Use the link in the description and code Galore10 to get started. And hey, if you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members there get full in-depth analysis on most of these stocks I mention here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. As always, do your own research, make informed decisions, and never invest more than you can afford to lose. Don't forget to like this video, share your thoughts in the comments below, and subscribe to the channel for more stock market insights and money-making strategies. Until next time.